Welcome to the weekly gold podcast. In today's news, what a week in gold. We have stepped back from the gold highs, and a few people have been commenting to me, is it time to sell? And I've said, no, I think it's time to get back in. However, the World Gold Council has reported today that the LBMA gold prices averaged a record of 2,070 in Q1. That is 10% higher year on year and 5% on the quarter. The gold scaled new heights in March, closing the quarter at $2,214 an ounce, pulled back a little bit, but we are still a very strong gold price. Mine production has increased 4% year on year, so a good time for the producers, but recycling has responded to these higher prices and has increased by 12%. That makes it the highest recorded recycling supply since Q3 2020. Interesting times. That also shot up in line with gold prices. However, Western and Eastern investors have been exhibiting a slightly different behavior. Western gold buying demand was robust, but it's also been met with healthy profit taking. That contrasted with strong buying into that price surge as well. But the price right now in US dollars is 2,291. That is of Wednesday, May the 1st, with silver at $26.50. That's US dollars. That means year on year, the gold price is up 19.5%. Can't get that in the bank, can you, ladies and gentlemen? And silver is up 10.6%. Can't get that in the bank either. I'm Kerry Stevenson. I'm that gold lady. Joining me today is Hedley Widdup from Lion Selection Group. G'day, Hedley. 30 seconds from you, Hedley.
Well, look, I think the most interesting thing this week is that gold has pulled back. We've seen a turnaround in interest rate sentiment. I mean, I've read 4 headlines today in prominent publications of how, you know, the whole sentiment has shifted. Nobody knows what's going to happen with interest rates, but everybody knows that inflation is here. And I suppose that's all we can really deal with. So sentiment has switched around. That's been fascinating, but I think we've also seen a lack of headlines out of the Middle East. So, you know, the headline that I was watching for to perhaps see the gold price perpetuated was more exchanges of munitions over boundaries in parts of the Middle East, which is not a human factor any of us want to see. But I thought that was quite correlated with the gold price going more vertical. So I just think that's been an interesting week in gold.
An interesting week in gold.
Do you want me to be more conclusive than that?
No, but your video is a little bit chop and change. It's not you, ladies and gentlemen. It's his connection, but we'll get it back. Let me go next to Brian Chu. He's the founder of the Gold Fund. Brian, welcome to the program this week. What have you been seeing?
Thanks a lot, Kerry, and glad to be here for the first time. So what I've been seeing in the last week, we've had the wrap up of the March quarter reporting, and corporate activity has been hotting up. Equinox Gold, I believe, have secured the 40% stake at Greatland Resources, Greatland Gold in Canada. But closer to home, Tietto Minerals, the barbarians are at the gates. The Chinese managed to sneak in and grab, well, they managed to grab only 42% of Tietto Minerals, except the directors have actually signaled that they put up the white flag because what I believe is the Chinese funds probably ganged up on Tietto Minerals and sold their stake to Zhaojin Mining, and they've secured Tietto Minerals at a steal at 68 cents. And the directors have made it very clear it was an opportunistic takeover. And I think there would be quite a few disappointed shareholders who are hoping that Tietto could head to $1, including myself and my newsletter readers. But corporate activity is definitely hotting up with gold. So therefore, gold stocks is definitely the place to be, in my opinion.
Yeah, well, talking about gold stocks, Simon Lawson, good to see you, Managing Director of the Spartan Resources, ASX code SPR, our only company director on this week. Simon, what you seeing?
Thank you for allowing me to come on the show and speak in, I suppose, in the company of such intelligent people that probably have a far better idea of what's happening with the gold price and interest rates and all that sort of stuff than I do. I'm a simple geologist just drilling some really good drill holes in Western Australia at the moment. But I suppose from my point of view, what I see is, apparently spending in Australia has slowed down. Inflation is still here to me. People are starting to feel it. Obviously, the price increases on everything still very, very evident. I saw record house prices only in Perth, South Australia, and Brisbane. Apparently, there's been a slowdown in the rate of increase with the Sydney market and Melbourne market, which is actually to me another indicator of what's happening domestically. But I'm renowned for posting the price of gold on
You
LinkedIn,
are.
letting everybody know what the current price of gold is. And as I said the other day, the cure for a lower gold price, which is a relative term, obviously, is high grade. So that's what we're focused on. That's what we're doing with our team at the moment.
Yeah, and they're getting some spectacular results out there. But listen, guys, this is just our friendly opinions, and it's not financial advice. You can get that responsibly sourced elsewhere. We're just having a conversation today. But look, stepping back from those record highs, don't know who wants to answer this one, but I think the Fed Reserve meeting is happening fairly soon. Hedley, maybe I'll go to you. Do you think that jobs data, got any views on that? Or Brian? Or I don't care who answers this.
Haven't got any text messages from my friends on the board at the Fed this week, Kerry. But I mean, I think the interesting dichotomy is that when the gold price goes up, it's all about Eastern purchasers transferring gold from Western sellers, and you see that in ETF flows and a couple of the other bits and pieces that kind of support what's going on. But then when the gold price comes down, it's all about pessimism about interest rates. So I think, if you follow that theme, is there going to be more selling of gold? Well, it probably comes down to whether or not those comments that come out of the Fed are going to be, leading the price up or leading the price down. And I think that's probably an each way bet. There are all sorts of thought bubbles that come out of those kinds of meetings, and they're not necessarily indicative of what's going to happen. I think if you tracked every single official comment which came out of the Fed and then compared that to actions and direction, you would be hard pressed to establish a really firm correlation. So I know a lot of people watch that closely, but it's only really good for short-term trading. I don't think they know almost as much about inflation as Simon does, who, whilst he's a geologist drilling some nice holes in Western Australia, turns out he's got a finger on the pulse there. So, inflation's not going away. It doesn't seem to have, in which case, the outlook for interest rates coming down looks to me pretty grim. So, it'd be interesting to see what comments they have, and I'm sure they'll be influential on gold. It's just hard to say which way.
Before I go to the others and talk about that, just a quick live update, if you like. The Australian Gold Conference is happening at Crown Towers in Sydney from the 26th to the 28th of August. Go and get your tickets right now at goldevents.com.au, because each of these people that you see on screen now, they're going to be there. Won't you, lads? Yes.
Yes,
anyway,
we will, Kerry. We can't say no to you. But having gone last year, I think that was probably the most productive that I'd been in 2 days at a conference, just for the range of companies that you had there and an audience, which was great fun to talk to. There's a lot of very vibrant conversation comes out of that. So congratulations on that, Kez, and really looking forward to the next installment as well. So I'll definitely be there.
Thanks, mate. Really appreciate that. But I think that actually leads me quite nicely into another subject, which is, why do you think, any of you, why do you think most Australians scratch their heads when it comes to gold? And they go, I don't even know how to get started. Anyone? Ryan, you've got a big smile on your face on that one.
I think it's this whole view that gold is a antiquated asset, and your grandparents or like basically the people of yesterday, last century, centuries before, would buy gold. And the truth of the matter is, I mean, cryptocurrencies, and I said the evil Bitcoin word right here, and I should be banned immediately. But no, well, the thing is, cryptos have actually stolen gold's lunch the last couple of years. Now, I'm not anti-crypto. I'm actually pro both, because I believe we share a common enemy, the fiat currency. And that's actually, I believe, why gold doesn't get much love among Australians. And furthermore, the mainstream media seems to be they seem to have an interest to keep gold out of the headlines, because that way it allows the central banks to continue to tinker around with their monetary policy. And going back to the last question regarding the price of gold and the Federal Reserve, when you think about it, the Federal Reserve, they were talking about maybe 6 interest rate cuts this year, early this year. Then it got to 3 in the March meeting. Then it got to 1. And who knows, tomorrow morning we'll wake up and they'll tell us no interest rate cuts because inflation's back in the game. And I mean, Hedley was having a joke about Simon saying the Fed probably knows as much economy as Simon. I reckon Simon probably knows way more about the economy than those economists who sit behind a table. I mean, I have been in university, I have worked with academics before, but those at the Federal Reserve really scrape the bottom of the barrel. I mean, they do wonderful research, but the thing is, they have nary an understanding of how the real world works. But where all the economy is run by these people at the moment, every word they say, they follow it. And I put my bet in gold and precious metal mining stocks, because I believe that their stupidity could actually cause massive economic problems in the coming year.
Oh, look, Brian, I don't disagree at all. And if I could just sort of jump in there and segue, what I see in the US was that traditionally there would be a lot of Eastern buying of bonds out of the US, which essentially underpins their economy, their debt position. They can sell more debt to Eastern countries, and they're not doing it anymore. The Eastern countries are not buying those bonds, and now I believe they've switched to buying more gold, which is why the price of gold has gone up. And the US is left with a position: how do we underpin our economy? Do we just print more money and inflate ourselves out of this current debt position they have, which is escalating beyond $34 trillion quite rapidly? It's a huge number, and given that there's only, I think it's 12 or 14 trillion in fiat currency in circulation in US dollars terms, where does that extra $20 trillion in underpinning come from? If you can't sell your bonds, you're in a sticky situation. So I think, in reference to your term, reserve banks, Federal Reserves doing things that don't make a lot of sense and sort of lend heavily towards alternative currencies, including precious metals and gold, is that's to me where the answer lies.
I kind of just sat back there and went, when you look at it, when you sit back and really look at it, it's a cluster, isn't it?
It is.
Where to from here? And it's interesting as well. Sorry to interrupt you, Hedley.
This fundamental is.
Go ahead.
This fundamental has existed for quite some time, though, too, right? I mean, it hasn't been just the last couple of weeks that the Fed or the whole US economy has had an absolutely damaged balance sheet. So what we're speculating here is about when the lacquer band snaps or the penny drops or whatever you want to call it. And I suspect that's probably a creeping realization, because, like any distressed institution, they'll do everything they can to deny or avoid any kind of impact or blame as time goes on. So as far as they're concerned, no problems. I'm sure the discussions behind closed doors are much different to that. But, from that perspective, to your original question, why don't Australians get what's going on in gold? Well, what average everyday Joe walking down the street does get what's going on with gold? Because I think the proportion of people that buy it and sell it are probably still quite small of the population as a whole. So, it's quite a sophisticated product. And all the themes that we've talked about are certainly not things which jump out of everyday newspapers as a conclusion. If you're going to have something forced down your throat in an investment sense, it's going to be shares in a gold explorer rather than the bars at the end of the day. That's what gets promoted. So, I think that's probably why a lot of people shy away from it.
But they shouldn't shy away from it, because, as we just said, the amount of debt that's sloshing around out there is just devaluing the paper money. They call it fiat currency, ladies and gentlemen, but these are the dollars in your bank account, or the dots on your screen, is being devalued. And the gold price that I mentioned before, that is, I said it in the wrong way. I said it's up 19% year on year. Actually, the Australian dollar is down 19% in purchasing power. That's the way we need to look at it, because it's not the gold price going up, it's your dollars losing purchasing power. Any comments on that from my wonderful
guest? That's the definition of inflation, right?
Exactly. Yeah. And Simon, to where you're sitting, managing people out there with your project, are you seeing inflation as an issue with your project or under control?
Oh, look, we certainly saw some massive impact when we decided to shut the plant down. That was a major factor in that. We were seeing labor cost inflations. We were seeing all sorts of different inflation across the board, food, all services, everything. Since we've shut back to an exploration company and really reduced the cost overheads of being a producing company, obviously we have aspirations to get back there. We are seeing some loosening in some of the service providers. There is a lot of movement within that service provision area, which is something we're closely looking at. Having just raised $80 million to put in a drill drive, we're seeing lots of healthy rates coming back from mining contractors as a really good indication to us. That the nickel price and then the nickel miners suffering is actually to our benefit, which, you never celebrate those things, but at the same time, we'll take that advantage when it's handed to us. So we will get this drill drive in and really start to de-risk the asset that we've got in front of us on our pathway back to a producing company. Because to me, that exposure to that increase in gold price, that sort of fear around fiat currencies and that rise in the gold price as a result is what we're focused on long term.
I'm curious, when do you think you're going to get into production?
Yeah, look, I don't even know what the number is in terms of the question. Let's say it's $100 million question, something like that. It might take us 12 months, it might be 18 months, but we're certainly doing everything we possibly can to get back towards that as our stated goal. We've always wanted to get back into production, but we want to make sure we have a sustainable business on the other side, because like any business, you want to be producing your product at a price that makes sense and produces a profit for your shareholders. So that's our number one goal.
And also, ladies and gentlemen, just to put it into perspective as well, it is a business. The gold mining companies, they're a business, and if they're not being run as a business, that's a red flag warning to me. And it's clear that Simon's doing it. It's a business. He's going to look at it, and he's looking at it for his shareholders. He's looking at how he can add value as they head back into production. Brian, bit of a disconnect, isn't there, between, and I'm going to ask this of Hedley as well, disconnect between the gold price and the equities at the moment?
Yep, I haven't actually seen this type of disconnect this big. Probably even have to go back to 2013, 2014, when I cut my teeth into gold stocks in that really brutal bear market. Now, if you look at the price of gold, that's been going up steadily since about 2019. And gold stocks, they've actually come back down, and then it's now starting to make its way back up. And it's interesting, we just passed the month of April, and in the April 2022, April 2023, and April 2024, we've seen highs, the ASX Gold Index heading to almost 8,000 points. Now, I hope history doesn't repeat itself, because if people remember, April 2022 and April 2023 gave way to a sell-off, the 2022 being more brutal than 2023. But this year, I think with gold being at record highs and with the tailwinds of the economic backdrop supporting it, I believe that gold stocks are going to close the gap. My reason for watching gold stocks being quite undervalued is, as Simon said, operating conditions have been difficult. We came out of lockdowns, we came out of border restrictions. We also had a huge amount of mining capital being moved into lithium, rare earths, and therefore gold didn't get much. So everyone had to compete for a lot of for the same amount of for the same stuff and skills. Now that rare earths and lithium are pulling back, that's actually helping reduce costs. And I am actually seeing AISC, the all-in sustaining cost, fall from its peak. Just for a bit of context, in 2019, the average AISC was about $1,200, and it peaked at $1,900 at the end of last year in December quarter. This quarter, I think, barring the whole Western Australia rainfall, the rainfall causing quite a few mines to deliver poorer performance, I think it's coming back probably down to 1800, 1850. I just got to get all the numbers in, and I'll be able to give it out in one of my newsletters later on.
And ladies and gentlemen, all-in sustaining costs, AISC, which is what he mentioned, all-in sustaining costs, the amount it costs them to get that dirt all the way through, what it's going to cost in overheads and mining costs and drilling, everything, isn't it? I just wanted to make that clear, because there's some people, I know some,
You're going to get a definition from Simon here.
Yeah,
look,
I'm going to give it to Simon.
I'm a big, obviously a big gold bull being in this space, but I'm also an operational guy that looks at these measurements and the standards that people put out there and are quite, influenced by it. All-in sustaining costs, while it might be portrayed as, that's how much it costs to get it out of the ground, that's actually, to me, a misnomer. And companies can misuse that all-in sustaining cost by essentially hiding some of their costs in parts of their balance sheet that aren't necessarily part of the all-in sustaining calculation. Okay. So the corporate all-in cost, the CAPE, that John Mack, that used to be at Argonaut, I believe, just up until recently, he had been using that. To me, that's a true measure. You take your opening cash balance, the amount of gold you produced, and your closing cash balance, and everything else better be explainable, because it's out to tails or it's sitting in circuit. There's pretty much only two other places that gold can be, and people will still manipulate those numbers as well. But for me, it's very, very clear. Shareholders read our cash flow statements. I want them to be able to see your opening balance, the amount of gold you produce, the amount you earn from the sales of that gold, and then your closing cash balance, and they better be damn close. Otherwise, there's some explaining to do.
There's a lot of leakage to capital from that kind of thing. I think that's probably one of the simple explanations of how it gets hidden, which is understandable if you're building a brand new project. But if you're essentially just operating, sustaining capital should all be in that number. And if there's fresh development capital, then you need to be disclosing it in a way which makes it clear. That's one of the things which I think irks a lot of people who watch those things closely.
That's right. So the growth capital is a classic bucket, right? But if you can't see the growth actually happening, then it's just being used as a place to put this capital that's supposedly being recycled around the company. The other one is gold in circuit. Now, there isn't any gold producer in my lifetime that is happy leaving gold in circuit unless it actually is in circuit. So if you see substantial amounts of gold being left in circuit,
what do you mean by that, Simon?
Right.
Sorry, there's a lot of people out there that won't understand what you mean by gold in circuit.
Yeah, so obviously you're processing at the same time you're reporting your cash flow, right? So you're selling gold that's being turned into gold bars at the other end of your plant, but during that period you have gold left in that plant, so it's making its way through the plant. You have to account for that because obviously it's highly valuable, and at the bigger plant you run with the higher grade, the more gold can potentially be kept in circuit at the end of the month or the end of the quarter. And so gold in circuit is another place where, if you see an abnormally large amount of ounces being left in circuit, that's bizarre. Like, I've seen people say, we've left 4,000 ounces in the safe. I'm like, yeah, that's not really in circuit. And why didn't you sell it? Like, if you're not selling it, that's not cash flow. And if it's still sitting in the tanks and you've got something like 19,000 ounces sitting in circuit, that's bizarre unless you're running a plant that does, 400,000 ounces a year. And your practical amount of gold that you've still got in circuit. Yeah, you've just got to just keep an eye on those things.
But for a lot of people, they don't know how to keep an eye on those things. And I think that's important. I think these conversations, just to keep people aware, especially, investors out there, again, not financial advice, but we want to educate you. We want to allow you to understand the best ways of looking at a balance sheet, especially in that. So I appreciate that, Simon. Something I didn't know, gold in circuit. There we go.
Actually, Kerry, I also want to jump in to add one more thing to that question is, despite the difficult conditions we've seen in the last 3 years, and we had massive inflation on the sites, what I have noticed, to the credit of most gold producers out there, is they actually, the larger gold producers have grew their cash balance in difficult times, which I couldn't say was the case in 2013 and 2014, as all these companies had came out of a massive bull market and some of them spent like drunken sailors, and then gold came down about $400-500 an ounce in a space of a year. and a lot of these mid-tiers were running on were marginally profitable, and then add growth capital where they're spending to grow their assets, that they were burning their cash reserves. But the last 2-3 years, the ASX listed gold producers, they were growing their cash balances, and that was to their credit. The price didn't really reflect it, and that's why I find it very exciting for investors out there who might want to have a look in this space.
Hedley, any commentary from you on this?
Am I commenting on the disconnect between gold equities and the gold price? Okay. Well, first of all, I suppose it depends on your time frame, because if you look over the last 12 months, who says gold equities aren't doing what the gold price has been doing? They've been, there is a trend of gold price goes up, gold equities, tend to reflect it. And they all have a short-term margin increase when the gold price goes up, particularly when it's been sustained over months like this one has been. So I think they do reflect the disconnect between the valuations, or the capitalization, if you like, of a collection of gold companies, say a decade or more ago, and now versus what the gold price is. And I think to account for that difference, you also have to account for the issuance of shares that have taken place in the meantime, and the inflation which has taken place in margin. I mean, if you were to compare the margins from point A to point B, it's no point just saying this is what the gold.
Oh dear, we've lost him.
Price has done, because costs are the hidden factor that gold price. Can you hear me?
No,
I must have.
It's
hello.
you reckon, boys? It's pretty. You were on such a good roll, but we lost you for a moment there.
Have you got me back yet?
Yes.
Yeah.
Oh, good. So I said something really clever, and I'm not going to repeat it. The gold price doesn't disclose the cost of producing that gold. So if you're comparing 2 points in time which are 10 or 12 years apart, there's no comparison for mine, unless you boil it down to what the margin was at both points in time, and then say what was the valuation of the gold businesses at the time, and think about premium or discount on average to NAV, as in just what is the business trading at, what are they valued at by people who can apply valuations to those businesses. And I don't think there's actually too big a difference there. But I would explain the difference between the index chart and the gold price chart as being down to the difference in costs over that time. And of course, they creep up quite a lot over time. And the deflationary, if you like, effect of issuing piles and piles and piles of equity, because there is not a single gold business which has existed in that time that hasn't issued a share. They've all issued lots more stock. So, the gold margin per share, if you like, even if it was exactly the same in dollar terms, has been eroded by the issuance of shares. So that's how I would explain that difference. Now, that's not to say that I don't think there's no upside in gold equities. I think there's quite a bit there. It's just that I wouldn't be applying a line correlation to it.
Interesting. It's been a very interesting conversation. And boys, I'm going to tell you something that you probably don't know. Well, first of all, I've got, where is it? I lost it. There we go. There was a gold pocket watch. Did you see that? There was a gold pocket watch from the Titanic, which was from the richest man on the Titanic, and it just sold. It's gold. That's why I bought it up. £2.3 million.
Was it bought by a gold company managing director?
No, it wasn't Simon this time. He's only into gin. He doesn't like watches. But
I don't mind a good watch, but just not one off the Titanic.
Yeah, and I don't mind a good watch either if anyone's out there wants to buy me a nice Rolex. I also want to let you boys know that we have a very special MC at this year's Gold Awards dinner. So we've got the Gold Awards dinner, and Spartan Resources are sponsoring the Hall of Fame Awards. So ladies and gentlemen, if you want to nominate for your Hall of Famer this year, sponsored by Spartan Resources, make sure you go to goldevents.com.au and put your nominations in. I want to see lots of interesting people. So I'm saying that to you guys as well. Put the nomination in for the Hall of Fame Award. Guess who the MC is? You've got one guess each. This year's MC. Do you know?
Kerry Stevenson.
No. I'm very dull and boring. I got to give them some value at the dinner. I
Need a bit of a clue.
Comedian. And clearly these boys are not into comedians. I'm going to tell you.
No, I find a lot of things funny, but these days the comedians just don't do it for me because there's too many canned jokes.
Okay, well, this guy's good.
Is it Jim Owen? We won't understand what he's talking about.
No, I don't even know who that is. There you go.
He was funny back then in the 90s.
Vince Sorrenti. Now,
I've heard of the name.
Wowzers. Kez, pulling power. Well done.
Not bad.
Yeah, so guys, again, you can buy your tickets online at goldevents.com.au. The dinner is going to be riotous with Vince Sorrenti. The last time I saw Vince, we rode on the back of a camel into a shed in Broken Hill. That's a whole other story. But guys, let's wrap it up for this week's roundtable. Let me ask each of you for your last comments. This week's forecast, what we should be looking out for. I'm going to start with you, Simon.
Look, I think the gold price is going to continue to do what it's been doing, which is sort of bouncing around. For me, I'm happy where we're at. I think Hedley's comment was probably the truest thing I've heard in a long time, which is it's actually the margin differential between the gold price and how much it costs to produce those ounces, and they've kept pace with each other, so the relative difference is still quite similar. But you know, I think that, you know, I'm always going to say I'm undervalued as a stock. Spartan is always undervalued, so that's my last word.
Well, my last word for you is the ASX code is SPR. Over to you, Brian.
I actually think that the Federal Reserve is going to come out sounding a bit more hawkish once more, and that could push the price of gold down to 22.50. And that would make sense given gold's had a very good run since the beginning of the year. And it would be good to see it build a base. But I don't really like making forecasts and hoping that people would hold me to my word. You should look at these things from a medium to long term, because gold is dealing with the economy and monetary policy. Now, if you want to find out more about my work, you can check out our website in goldfund.com.au. Or if you want to sign up to a newsletter and work out how to build a good precious metals portfolio, you can go to Fat Tail Investment Research, where I write the newsletters, the Australian Gold Report, and also the speculative newsletter Gold Stock Pro.
He is a prolific writer, ladies and gentlemen. So I'll put those links down below as well. Brian, Hedley, the final word, almost, because I'll have the final word.
Okay. Well, look, I mean, what I'm on the lookout for, and it might happen this week, you never know, is a signal of that penny dropping. And I think when the penny drops or the elastic band breaks or whatever it is, I think it would be some sort of signal that Western markets, Western financial markets, believe this sense of interest rates are here to stay, inflation is here to stay, and for that reason, gold is a big thing, because it's been Eastern purchases, I think, which have driven the price so strongly. So if Western buyers were to join that queue, I think you could start to be a lot more bullish about the gold price. I sort of have a soft sense of positivity about it, but, you know, for a hard sense of positivity, starting to see it go, you know, and make real numbers, then that's what I'm looking for. And when you've got Fed meetings and enormous shifts in sentiment, that's when that kind of thing can take place. So perhaps we're quite close to that, but happy to check in on another time. And if anyone needs anything to think about in the meantime, after you've checked out Spartan, just L, S, and X in that order into your computer. And it's not a recommendation. It's just, as Molly would say, do yourself a favor. Check it out.
I absolutely love it. And for those of you out there that are scratching your heads saying, I don't even know where to get started, we have a free event on Monday, the 26th of August. Again, you can register at goldevents.com.au. It's free. And what we're going to do is we're going to explain to you how easy it is to protect your purchasing power in these crazy days when government central banks keep printing the paper into oblivion and your purchasing power is being eroded quicker than a cheese sandwich. I don't know where that came from. Anyway, thanks for your company, guys. Really appreciate each and every one of you. Visit goldevents.com.au and we'll see you same time next week. Thanks so much.
Well done, Kerry.
God bless. Thank you.